Ladies and gentlemen, welcome back to the channel. Stocks are soaring higher. AMC as well is in the green by a pretty nice margin. We need to go ahead and get into what's going on here on the day today. In fact, we actually predicted this would happen. Yes, yesterday's video, go ahead and fact check me. We almost perfectly nailed the inflation report. So we're going to bring that to you here in this video, as well as all of the data you need to know on AMC stock and what is ahead for our markets. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Yeah, you definitely need to let me know what you think about this one. So first things first, let's get into the CPI report. CPI, well, it was beautiful today. Inflation was flat in October from the prior month. Core CPI hits a 2-year low. Let's go to the calendar to actually look at this a little bit easier. It's impressive, and it's, well, exactly what we thought it would be. Almost exactly. Core inflation, month over month, came in at 0.2%. You were expecting 0.3%, so that was much better than expectations. Core inflation rate year over year came in at 4%. You were expecting 4.1%. I was actually expecting 3.9%, so that was a little higher than what I was expecting, but I expected core month over month at 0.2%. Now, your inflation rate month over month came in at 0% for your headline. Your inflation rate on the headline year over year came in at 3.2%. You were expecting 3.3%. I was expecting around 3.3% as well. I did think these numbers could possibly come in a little bit lighter, but I was not dead set on that. And yeah, your headline inflation rate, that actually came in better than expectations at, again, 0%. So that's pretty exciting, guys. This is causing a heck of a rally here today for our markets. And yeah, when I say a heck of a rally, a heck of a rally. The Russell, which is really the most important index for AMC, is up 4.13% today. 4% on the Russell is insane. The NASDAQ up 2.33%. This move was way bigger than what was priced into stocks following the CPI report. And this CPI report just came in so good. I mean, yeah, it's hard to be bearish. That's why I've been saying here on the channel, it's hard to make a bearish case from now until the end of this year. If you guys can, let me know down below in the comment section. But we just got earnings out the way. We just got the Fed out the way. Now we just got CPI out the way. Tomorrow you're gonna have retail sales. This data that tracks that tracked 500 billion in sales for the month of October showed weakness in gas station sales, electronics, appliances, furniture, and home stores. And it looks like the retail sales fell by 0.08%. According to this data. Now, we get the actual government report coming out tomorrow morning. If that is also, in line with what we're seeing from the CNBC survey, we reported on that yesterday, well, you could actually see quite the rally for markets. Now, the current expectation is around negative 0.3%. These expectations just changed. Yesterday, you were expecting negative 0.1%. So, well, it seems like people are a little bit more negative now that inflation just came in at 0%, because that probably means not a lot of people were actually out spending money, and there was not a lot of, obviously upward pressure on inflation as a whole. So that makes some sense. That's why that is going to be so important. Now, PPI month over month can somewhat be seen as a leading indicator, because PPI is the wholesale inflation, kind of like producer inflation, right? It stands for Producer Price Index. So if producers see inflation, well, it usually takes some time before consumers see that inflation. So that's why we want to be watching PPI tomorrow. I don't think it's going to be an event, really. I think CPI was the big event for this week, but retail sales could also help affect things like bond yields could start pricing in easier Fed policy. And on that note, let's look at bond yields today. 10-year treasuries down about 17 basis points. At the time of recording this video, 10-year treasury yields tumble below 4.5%. On cool October inflation report is one of the top headlines for the bond market today. And this is, really good, especially if you are someone looking at any real estate for investment purposes or for just personal purposes. I have an investment property right now that I'm trying to close on. And this today definitely helped considering I was floating the rate. So it's going to be a lot cheaper to buy the interest rate now after today. That should help spur some activity out there in the economy. And it's really a fine line between too much activity and not enough. You don't want to see a recession. So these yields plummeting today is obviously good for stocks, but as well just good for the broader economy itself. So that is pretty dang exciting. That is what is causing this market move higher today. This is having a positive impact on AMC stock, although it would be a lot better if AMC hadn't diluted shareholders or just announced that. AMC stock would probably be in the 20s right now, considering they had fantastic earnings and just there's really nothing you could say negative about AMC's earnings. There was not like one spot of their earnings that was really, really bad. That just wasn't the case. It was all really dang good. Even the writer-actor strike, the thing that was like the biggest causer of fear for AMC earnings, and that's why AMC initially dropped after hours, that got resolved within 2 hours of the earnings call ending. Like, there was nothing, and then AMC diluted shareholders. And now, well, sure, you're getting bond yields coming down. That is great. AMC is up 1.64%, but it's not participating the way it otherwise would have. Now, if this rally continues and you really start to get a more risk on market, this market's been risk off for 2 years now, right? The Russell is or has not been a great place to be. Okay, well, now today, after that 4% gain, it's looking a lot better. And this could set us up for a broader market rally, potentially heading into year end, where you could see all kinds of different stocks that actually start to do well. And I think if that scenario does play out, the AMC stock will also start to do pretty good also. Now, I should also kind of point out, anytime you've bought AMC towards its 52-week low, you've made money over the course of the next month to 3 months. Now, not every time, not literally every time, but usually you do see some form of a bounce when you are at these levels. AMC stock is almost up 2% now, so even going higher, breaking above $8 per share. You're at $8.04, up almost 2%. The RSI at 36.96, so you definitely are on the oversold side of things as well, considering you're under 50, and 50 is the neutral level. You're still pretty dang oversold, so it wouldn't surprise me to continue to see a bounce from here in AMC or in other stocks as well. I don't think this is a one-day event. This is probably a multi-week event heading into the end of this year. As long as it doesn't look like a recession is coming right around the corner, stocks, I think, have a pretty clear path to move higher, guys. So let's go ahead and get into some of this Ortex data, take a look at the Snocco tracker data, and go over a couple other things as well. So you do have a short interest free float at 10.18%, $159.06 million worth of short positions. Days to cover at 0.88, 20.13 million shares that are sold short. Shares out on loan, 21.2 million. Cost to borrow, 1.31%. Utilization of 48.58%. And a short score of 60.77 out of 100. So some better numbers, right? They're better than where they were, but not that impressive as well. Now, if you take a look at the cost to borrow fees, cost to borrow average 1.43%, cost to borrow minimum 1.25%, cost to borrow max 2.3%. 0.32%. So cost of borrow fees, pretty dang low. Honestly, I find that hard to believe cost of borrow fees are that low. If you're looking at the put to call ratio for the next 1,000 days, that is at 0.67. And if you're looking at the activity here today, on the call side, 67.9% is call volume, and on the put side, 32.1% put volume. Open interest at 65.46%, expiring by this Friday on the call side, and 34.54% open interest on the put side. Taking a look at the option activity here today, so far it looks like you have about 9 orders totaling $611,000 with a positive order value of 9%. So still not looking all too bullish, and again, that's because of the dilution. Hopefully, it seems like that is coming to pass, and today could be the first day of that. Now, you actually could be looking at quite the gamma squeeze this week if you do continue to see a market rally. If retail sales come in as the other data that CNBC survey suggests it does, which that was a lot of data aggregation there. $500 billion in sales for the month of October. I think it's pretty concise. Retail sales is going to come in negative tomorrow, right? If it doesn't, I'll be shocked. And I really have to question the data at that point, because $500 billion in sales has to be almost all of the retail sales that we've seen in the month of October. I can't imagine the number is much larger than that. Now, if you take a look at the option activity this week, calls currently in the money 11,000, calls out the money 143,000, puts in the money 22,254, puts out the money about 59,000. So there is a lot of dry powder, if you will, on the sideline on the call side, as well as on the put side, that, you know, if the calls start to go into the money and the puts go out of the money, that can give you quite a bit of upward pressure on AMC stock. Now, if you take a look at the Fed rate monitor tool, see what Fed futures are pricing in for Fed policy following this inflation report. Might take a second to update this. And yeah, there is a 100% chance of a hold for December. For January, there's a 100% chance of a hold. For March, there's actually a 28% chance of a rate cut. This is the first time you've seen this in a while. There's a 72% chance of a pause, but a 28% chance of a rate cut. For May, you're firmly now pricing in your first rate cut. And this was getting pushed out to, you know, potentially even June as of yesterday. Let's see. Yeah. Yesterday, there was a 40.9% chance that we would be paused until May. The current probability is 21.5%. Now it's a 58.8% chance that we do get our first rate cut in May. So Fed futures are definitely pricing an easier Fed policy, and that's really why markets are up about 4% today. A broader look at what else is going on out there. You do have TLT up 2.2%. Great news, just showing you long-term treasury yields are falling today. Oil is up 1.33%. Not the greatest sign, but you've still fallen a lot from where we just were as of like September, even October. So for the start of November, I mean, oil's still falling quite a bit. The dollar is down about 1%. That is actually a huge deal. If you are a multinational company, like an Apple, like a Tesla, like a Google, like a Microsoft, your largest companies in the world that do business in foreign currencies, well, the dollar falling is really going to help that conversion ratio. Gold is up about 1%, which I do find interesting considering there's not a lot of like external fear that is happening today. So that's a pretty interesting one. Would like to see gold negative today, but I don't think that is telling you all too much if gold is up on the day today, as well as, I mean, the Russell up 4%, the NASDAQ up 2.5%, things of that nature, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.